What's up, crypto enthusiasts? Get ready to dive headfirst into the most explosive news shaping the digital asset universe right now. The market is moving at hyperspeed, and if you're not plugged in, you're missing out on the action. We've got critical updates that could redefine your investment strategy and shift the entire landscape. From game-changing investment vehicles to crucial policy debates that could impact innovation for years to come, this is the intel you absolutely cannot afford to miss. We're breaking down the seismic shifts, the insider plays, and the future-forward movements that are setting the stage for what's next. Stick around, because this is Bitcoin Bulletin, and we're bringing you the unfiltered truth, the raw data, and the hype you crave. Let's get into it. First up, we're talking about a new way to get your Bitcoin exposure, but it comes with a serious thrill ride. Get ready for a deep dive into a product that's seeing massive investor interest, especially for those looking to amplify their gains in a volatile market. This isn't just another investment. It's a high-stakes play that's capturing the attention of both Main Street and Wall Street. We'll tell you exactly why this 2x leveraged Bitcoin ETF is making such waves and what it means for your portfolio. Then, we're heading straight to the heart of policy making. The future of innovation in the digital asset space is on the line as advocates are sounding the alarm in Washington. We've got a critical look at a letter sent to Congress, signed by a massive coalition of industry leaders, warning that a failure to protect developers could send innovation packing overseas. This is a pivotal moment that could determine whether the U.S. remains a leader in this cutting-edge industry or falls behind. You do not want to miss this crucial debate. Next, we're diving into the whale tanks. A massive move has just shaken the foundations of the crypto world as a legendary Satoshi-era whale has made a colossal swap, trading hundreds of millions in Bitcoin for Ethereum. What does this monumental decision signal for Bitcoin's reign and Ethereum's ascent? We'll break down the implications for fintech, the wider market, and what it means for the future of digital assets. Finally, we're looking at a unique investment vehicle that's designed for those who want to amplify their Bitcoin exposure, but it comes with a serious thrill ride. Get ready for a deep dive into a product that's seeing massive investor interest, especially for those looking to amplify their gains in a volatile market. This isn't just another investment. It's a high-stakes play that's capturing the attention of both Main Street and Wall Street. We'll tell you exactly why this 2x leveraged Bitcoin ETF is making such waves and what it means for your portfolio. Make sure you smash that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. We'll see you in the next segment. A high-octane investment opportunity arrives. The financial world is buzzing with a new investment vehicle that's rapidly capturing the attention of both seasoned traders and those new to the market. The BITX, a 2x leveraged Bitcoin ETF. This innovative product offers a way to gain amplified exposure to Bitcoin's price movements, and its recent performance has been nothing short of spectacular, surging by an impressive 10.34% in a single trading session. This surge isn't just a random spike. It reflects a growing demand for leveraged crypto exposure, driven by a confluence of factors including Bitcoin's inherent volatility and anticipation surrounding macroeconomic shifts, such as potential policy changes under the incoming Trump administration. Investors are increasingly turning to products like BITX to capitalize on market swings, seeking to maximize returns in an environment where strategic leverage can be a powerful tool. The structure of BITX is designed to track a Bitcoin strategy index, incorporating real-time liquidity data. This meticulous design makes it a significant indicator of current crypto investor sentiment and the performance of leveraged strategies. As Bitcoin itself navigates fluctuating market conditions, BITX provides a concentrated way to participate in these movements. The ETF's recent performance data shows it outperforming many traditional and crypto-linked ETFs, solidifying its position as a prominent player in the leveraged ETF space. For instance, in the week ending November 26, 2024, BITX's 10.34% gain placed it among the top-performing leveraged funds, mirroring broader market trends where leveraged products tied to Bitcoin and volatility are experiencing heightened interest. This trend extends beyond crypto, with leveraged ETFs in sectors like AI and gold also showing significant momentum, indicating a broader investor appetite for amplified returns. The appeal of BITX extends to both institutional and retail investors. Its ability to offer 2x leveraged exposure means traders can potentially double their gains or losses without the complexities of directly holding and managing Bitcoin. This is particularly attractive in a market known for its rapid price fluctuations. Analysts are closely watching BITX, viewing it as a barometer for the effectiveness of leverage strategies in the current economic climate. The fund's performance is intricately linked to Bitcoin's price action, volatility indices, and overall market liquidity, with real-time data from sources like Nasdaq providing crucial insights into its trading dynamics and execution costs. As Bitcoin's year-to-date gains continue to impress and further price consolidation is anticipated, BITX is poised to remain a key metric for assessing investor sentiment and the strength of leveraged plays in the cryptocurrency ecosystem. The fund's strategic positioning and performance data suggest it will be a vital tool for traders looking to leverage Bitcoin's inherent volatility while maintaining a degree of managed risk. This surge in interest for leveraged Bitcoin products, like BITX, highlights a growing confidence in Bitcoin's long-term potential, even amidst market volatility. Investors are actively seeking ways to amplify their exposure, signaling a bullish outlook for the asset. But is this amplified exposure the only game in town? We're also tracking a critical development in Washington that could shape the entire industry's future. Stay tuned. Capitol Hill confrontation. Developers' fate hangs in the balance. The very foundation of innovation in the digital asset space is facing a critical juncture as a powerful coalition of over 110 crypto investors, developers, and advocacy groups has issued a stark warning to the U.S. Senate Banking Committee. At the heart of their message is a fervent plea for robust, nationwide protections for software developers and non-custodial service providers within upcoming market structure legislation. The DeFi Education Fund spearheaded this crucial letter, emphasizing that without these essential safeguards, the United States risks losing its competitive edge, driving vital innovation overseas and significantly stalling the broader adoption of crypto technologies. This isn't just about the crypto industry. It's about America's future in technological advancement. The signatories, a formidable list including heavy hitters like the Bitcoin Policy Institute, the Blockchain Association, and the Digital Chamber, have made their stance unequivocally clear. Without such protections, we cannot support a market structure bill. This statement draws a sharp contrast between the established regulatory frameworks of the traditional, intermediated financial world and the inherently different nature of open-source development. The letter argues forcefully that developers must be shielded from being forced into unworkable regulatory categories that fail to acknowledge the unique contributions and responsibilities of those building the decentralized future. If the United States is to fulfill aspirations of becoming the crypto capital of the world, as envisioned by President Trump, it must champion cutting-edge software development, just as it did in the nascent days of the Internet. The urgency of this appeal is underscored by concerning statistics. The share of open-source developers based in the United States has reportedly dropped from 25% in 2021 to just 18% in 2025, a decline explicitly attributed to a persistent lack of regulatory clarity for software development. This trend poses a significant threat to American competitiveness and technological leadership. The letter does, however, acknowledge positive steps, expressing gratitude for the inclusion of language from both the Blockchain Regulatory Certainty Act, BRCA, and the Keep Your Coins Act in recent drafts of the Clarity Act by the House and Senate. These provisions aim to protect developers of non-custodial crypto software, a vital step forward. Crucially, the letter stresses the imperative that these protections remain intact and are even strengthened. It calls for explicit clarification that no individual or entity should face regulation solely for activities core to creating, developing, publishing, and maintaining blockchain networks. Furthermore, it emphasizes the need to protect those enabling users to access these networks via software interfaces while maintaining self-custody of their funds. This bipartisan issue has already seen significant support, with a supermajority of 294 members of the House of Representatives voting in favor of the Clarity Act. The message to the Senate is clear: build upon these developer protections and ensure the United States remains at the forefront of digital innovation. The potential exodus of talent due to regulatory uncertainty is a clear and present danger to the growth and adoption of blockchain technology in the U.S. This fight for developer protection is critical, but what happens when massive amounts of capital start moving between the biggest digital assets? We're about to find out. Satoshi-era whale makes historic $437 million Bitcoin to Ethereum swap. In a move that has sent ripples through the cryptocurrency community, a legendary Bitcoin whale, originating from the Satoshi era, has executed a staggering $437 million swap, converting a massive amount of Bitcoin into Ethereum. This monumental transaction is not just a simple trade. It's a powerful signal that could redefine market dynamics, challenge Bitcoin's long-held dominance, and significantly impact the trajectory of fintech startups. The question on everyone's mind is, what does this colossal maneuver signify for the future of digital assets, and how should businesses adapt to this evolving landscape? This strategic pivot suggests a strengthening conviction in Ethereum's future potential, particularly as it continues to lead in decentralized finance, DeFi, and smart contract innovation. The whale offloaded approximately 3,968 BTC, valued at around $437 million, and immediately acquired 96,531 ETH, worth approximately $443 million. This action is far more than a personal investment decision. It may represent a broader market sentiment shift, potentially influencing other large holders to follow suit and further compressing Bitcoin's already challenged market position. Ethereum's increasing market share presents a direct challenge to Bitcoin's established reign. As institutions show growing interest in Ethereum, a significant capital inflow into Ethereum-based products appears imminent. This could serve as a powerful bullish indicator for ETH, potentially catalyzing similar moves from other major players and solidifying Ethereum's ascent. The implications for fintech startups are profound. Ethereum's robust smart contract capabilities are enabling the creation of groundbreaking financial products that extend far beyond simple payment solutions, catering to the increasing demand for complex financial instruments. Forecasts indicate Ethereum could capture around 14.6% of the market share by 2025, fueled by institutional interest, DeFi growth, and ETF capital inflows. This transition opens up several critical avenues for fintech firms. Enhanced institutional confidence and capital influxes, driven by better regulatory clarity, promise a more stable environment, reducing volatility risks. Ethereum's position as an innovation hub for smart contracts allows fintech startups to develop sophisticated financial products. Furthermore, Ethereum's deflationary model and staking yields, currently around 3.8% APY, offer attractive options for startups to integrate yield-generating crypto products, appealing to users seeking income over mere capital appreciation. The development of Layer 2 scaling solutions is also accelerating transaction speeds and reducing costs, enabling more efficient and user-friendly crypto services. For crypto-friendly small and medium-sized enterprises, SMEs, navigating this shifting landscape requires strategic adaptation. Key strategies include maintaining agility and compliance with evolving regulations like the EU's MiCA framework, emphasizing both Bitcoin and Ethereum as treasury assets for inflation hedging and portfolio diversification, and integrating crypto payments and payroll services for operational efficiency and customer appeal. Leveraging regulated crypto banking services simplifies management and security, while active engagement with the crypto community and ecosystem can foster innovation and compliance. Ultimately, a balanced, compliant, and strategic approach will enable SMEs to capitalize on opportunities while mitigating risks. While this whale's move signals a strong belief in Ethereum's future, Bitcoin's status as a store of value remains robust, supported by its digital scarcity, security, and market maturity. However, the competitive pressure from Ethereum and other assets will undoubtedly influence investor preferences moving forward. This massive capital shift is a clear indicator of evolving investor sentiment. But what about the tools investors are using to navigate this volatility? We're looking at a specific ETF that's seeing a surge in popularity. Bitcoin's 2x leveraged gamble ignites investor frenzy. In a market characterized by dynamic price swings and an insatiable appetite for amplified returns, the Volatility 2x Bitcoin Strategy ETF, or BITX, has emerged as a star performer, capturing significant investor attention and demonstrating remarkable growth. This innovative financial instrument, designed to provide a 2x leveraged exposure to Bitcoin's price movements, has surged by an impressive 10.34% in a single trading session, signaling a robust demand from both institutional and retail investors seeking to capitalize on Bitcoin's inherent volatility. The timing of this surge coincides with broader market trends and anticipated macroeconomic shifts, including potential policy changes influenced by the incoming Trump administration, which are driving increased adoption of leveraged products across various asset classes. BITX's appeal lies in its sophisticated structure, which tracks a Bitcoin strategy index incorporating real-time liquidity data. This design not only amplifies Bitcoin's daily returns, but also positions BITX as a key indicator of crypto investor sentiment and the performance of leveraged strategies in the current market environment. Analysts have noted BITX as one of the top-performing leveraged products in recent weeks, with its returns outpacing many traditional and crypto-linked ETFs. This performance aligns with a broader trend where leveraged ETFs tied to assets like Bitcoin, artificial intelligence, and gold have seen substantial momentum, with several products delivering over 25% returns within a single week. The growing adoption of Bitcoin as a strategic asset, coupled with macroeconomic factors, is fueling this demand for leveraged exposure. The fund's significant gains, such as the 10.34% rise recorded in the week ending November 26, 2024, highlight its effectiveness in capturing market movements. While Bitcoin itself saw a modest 0.19% gain during the same period, BITX's leveraged structure allowed investors to magnify those returns. This has made BITX a focal point for traders looking to leverage Bitcoin's price swings without the direct complexities of holding the underlying cryptocurrency. The fund's price movements are closely tied to Bitcoin's action, volatility indices, and overall market liquidity, with data from Nasdaq providing essential insights into its trading dynamics and execution costs. These features are crucial for traders aiming to manage risk while pursuing amplified gains through precise order types and size management. BITX's performance has also positioned it as a critical barometer for the success of leveraged and inverse ETFs in general. With Bitcoin having already achieved substantial year-to-date gains and further price consolidation expected, BITX is likely to remain a vital tool for assessing investor sentiment and the potential of leveraged strategies to outperform traditional portfolio allocations. Traders and analysts are increasingly using BITX as a proxy to gauge market expectations and the strength of directional bets on Bitcoin, making it an essential watch for anyone interested in the amplified side of crypto investing. The substantial gains and growing investor interest in BITX underscore a broader market trend towards seeking leveraged exposure to volatile assets like Bitcoin. This focus on amplified returns is certainly compelling. But what happens when massive capital shifts occur between the titans of the crypto world? We're breaking down a monumental whale transaction next. All right, let's do a lightning-fast recap. We saw the BITX ETF surge on leveraged Bitcoin exposure. Then, a massive coalition warned Congress about protecting crypto developers. We also covered a Satoshi-era whale swapping $437 million in BTC for ETH, signaling a potential shift. And finally, we dove deep into the BITX 2x leveraged Bitcoin ETF's explosive performance. Don't forget to like this video, subscribe to Bitcoin Bulletin for all your crypto news, Hit that notification bell so you never miss an update, and drop a comment below with your thoughts. Follow us on all our social channels for more insights. We'll catch you on the next one.